What is going on, all you beautiful people? A few weeks ago, a lot of people started to ask me to look into something called Thor Nodes. I get a little excited every time I hear the word node, so I decided to look into it. I spent the past week doing some deep research on Thor Nodes, and today we're going to talk about what the Thor Node project is, how they make money for investors, their team and their big recent announcements that they made, and whether or not you should invest. If you're new here, my name is Jason, and I am on a mission to make $5,000 a month in passive income in the next 5 months. Well, actually, it's the end of January, so I have 4 months left. I share all the nitty-gritty details with you all. I share my wins, my losses, my learnings, and it's my hope that you can learn something from each and every one of my videos. If you find this video helpful, then do yourself a favor and do the community a favor and hit that like button. And if you're interested in following my journey at all, hit that subscribe button. We try to do new videos at least once a week. And hey, if I start making $5,000 extra a month, then you can probably do it too. So we're gonna open up my Notion page that I have created for this video. It's something I do for most of my videos. Also, I'm not planning to take on any fintech or crypto sponsors. I don't want to have any conflicts of interest for the channel. But Notion, if you're out there and you see this, I might take a sponsorship from you guys. That would make a lot of sense, I think. Okay, let's jump into it. So let's talk about Thor Nodes and their tokenomics and revenue. Let's get the basic understandings first. So the project on a high level, they're an investment fund. Please, no autographs. I know my artwork is really good, but we're gonna hold off. Maybe I'll turn this into an NFT one day, but again, we'll save that for another time. Let's take a look at how this works on a very basic level. So you have your group of investors here. They invest their money and they give it to Thor. Thor then takes that money and they invest into other DeFi projects. They also invest it into validator nodes. With the DeFi projects, they are hoping to get a yield or some type of return. That could mean that they're doing some yield farming. That could mean they're investing into a coin that they want to just hold on to because they think it's going to go up in price. They can do a lot of different things with that. That produces some level of income for them. And then validator nodes, there are plenty of other videos out there that talk about what validator nodes are and their role in the blockchain, including one I made on StrongBlock. But the basic concept is that validator nodes validate a transaction on the blockchain. As a reward for doing that, the validator node gets a small transaction fee. When Thor sets up these validator nodes, they get a small transaction fee every time they validate a transaction. That becomes another source of income for them. All of this income from DeFi and validator nodes gets paid back in two places. Part of it goes back into the Thor project itself, and a large part of it actually gets sent back to the investors as rewards. This is actually very similar to a lot of other institutional investing, particularly the venture capital world. In VC, a fund goes out and they raise money from LPs, limited partners. A bunch of LPs pull their money together, they give it to the VC, and then the VC then places a bunch of bets on a bunch of different startups. A lot of those startups will fail, but some of them will make it, hopefully. The ones that make it have higher and higher valuations. The VC gets money back from those, and they distribute a big portion of those profits back to their limited partners. Obviously, they keep some for themselves as well, but that's how it all works. Thor is very similar, except what they're also doing is they have these validator nodes, which become more of a recurring revenue stream for them as well. Now, obviously, the income that they're generating here needs to be higher than the rewards that they're paying out. Otherwise, they're going to run out of rewards to give out. And when you invest, another thing to know is that the amount of rewards that you receive are based on the level that you invest in. So the more you invest, the higher level you invest in, the more rewards you earn. Higher risk, higher return. And Thor right now offers 4 tiers of investing, all with Thor-inspired names. Confession, I have never seen any of the Thor movies, so we just got Disney Plus, so maybe I'm gonna have to start doing that. Please let me know in the comments where I should start, which Thor movie is the best, because I'm pretty clueless. Let's get into a little bit more of the details around how Thor is set up. We're going to use round numbers here just to make it really simple. So let's say you buy a node for $100. You buy that node for $100, you give it to Thor. In return, you get a node. And they take $80 of your $100 and they distribute it out to other node holders as their rewards. They also take the other $20 and that goes into the treasury. Now, from there, the treasury decides what they want to invest in. So they take that money, put it in different investments, other DeFi projects, and as well as other validator nodes that they're setting up. These validator nodes can be really expensive. I think they set up a couple recently, and each one costs $500,000 just to set up. And to set up a validator node, you usually have to lock your investment up in the node for at least a year. Then the income and revenue that they're generating from these investments gets used in a couple ways. One, it goes back into the treasury. From the treasury, it gets distributed back to other node holders as rewards. They will also use that revenue for buybacks. They will buy back Thor on the open market. And the reason they want to do that is to make sure that the price of Thor maintains a certain level, because as people start to get rewards, eventually they're going to want to cash these out. And to cash them out, they're going to have to sell their Thor. So if they sell their Thor, that is going to create a selling pressure on the token, and the price of Thor is going to go down. So everyone else that's still holding Thor, the value of their investment will be going down as well. And when they buy that back on the open market, that goes back into the treasury. and they can then use that again to either invest elsewhere, or they can also distribute that to other node holders. God, saying node holders, holders of the node, that sounds more Thor-like. And it's easier to say than node holders. So they distribute to other holders of the node, holders of the nodes. You guys get it. So right now, they are making some node revenue. They have 2 full-time Phantom validator nodes, and they have 1 AVAX validator node. The AVAX one they just purchased like the other day. They are also going to start charging a monthly maintenance fee for node holders of the node. That's going to be kind of their own subscription model. Strongblock does the same thing. It's $15 a month per node, except you have to pay those in Ethereum, and the gas fees can be more expensive than the maintenance fee itself. And it means they can earn some income without having to risk money that they're investing, or by having to attract new people to the project. We'll get into the different levels of nodes here in a second, but the amount of your maintenance fee depends on the type of node that you have. The bigger the node that you have, the more expensive the monthly maintenance fee, and it ranges from $5 to $80 per month. All right, let's take a quick look at the 4 different levels, 4 different tiers of nodes that they have. They have Heimdall, Freya, Thor, and Odin. Again, I'm a Thor noob, so I don't really know what any of these mean, but I'm assuming they're all Thor related. Anyways, here are the different levels that they have, and here's the cost of each one of them. You buy them each in Thor. As of today, Thor is around like $160 per Thor token. The Heimdall node is going to cost you about $200, 1.25 times the $160, $170. So you can see how it scales up, right? This is about 4 times the price of that one. This is about 2 times the price of that one. And this is a lot of times the price of this one. But really, what's that, like 5.5, 6 times, something like that? And you can see the daily rewards as well. So here you're getting 0.008 Thor per day on Heimdall. It goes up to 0.050 on Freya, 0.144 on Thor, and you actually get a full Thor and change per day with Odin. Now, one thing that's really important to note, just this past week, they updated the reward structure to what I'm showing you guys right now. Prior to that, they had a much more aggressive reward structure. And this is pretty common, right? When a node project like this starts up, they need to attract a lot of people to join. And to do that, they offer really high rewards. It's like anything else in business. You need to attract people, you have to offer something that's attractive. So they did that, and then they started with a really attractive rewards program. And then this week they released a much less attractive rewards program. However, the reason that this is so important is because it is necessary for the sustainability of the project itself. Remember, the income that they're generating needs to be higher than the amount of the rewards that they're paying out. Otherwise, they're going to run out of rewards to pay out people unless they can keep attracting more and more users to the project, which in that case is just a Ponzi scheme. That's why this reduction in rewards amount is such a healthy thing for the long-term value of the project. Looking back at the actual reward structure, the other thing that's important to know is that there's a claim tax. So anytime that you want to claim your nodes, you have to pay a tax. The lower node tier that you have, the lower that tax is. As you can see, it's kind of a progressive tax. It's 1% for Heimdall and works its way all the way up to 10% for Odin. So say you had 10 Thor that you wanted to claim. When you go to hit claim those 10 Thor as an Odin holder, then you're actually going to be taxed 10% of that. So 1 Thor, so you'll be given 9. And the Thor that they collect via taxes goes again back into the protocol. The other thing to think about whenever you're investing in a project like this is what the payback period is. There's 2 things to remember. 1 is the amount of Thor that you're returning every single day. And 2 is the value of that Thor. So you can see you get shorter payback periods here for the more risk that you take on. But the more risk you take on, the more Thor you own, the more dependent you are on the value of Thor itself. And when you compare this to Strongblock, the payback periods are pretty similar. On the original Ethereum Strongblock node, the payback period is around 110 days. And so Thor is trying to be competitive with that. And that's something they mentioned throughout a lot of their literature and their conversations. They're trying to be really competitive with Strongblock and other node projects out there. Man, it is 61 degrees in my basement right now. If you haven't done so, hit the like button and subscribe already so I can monetize this channel and afford some more heat. The next thing we're going to talk about is probably the most important thing to consider when investing your money anywhere, and that is the team itself. You're making a bet on the team as much as you are the technology. Let's start with the team's track record. Right now, I give their team track record a C-. That's because we just don't know a lot about the people on the team. And the ones that we do know about, we're left with limited anonymized data to go off of. Founder is this guy, El Crypto Chapo. He's got a decent following himself. He seems to have been around crypto since at least 2018 based on some of his Medium articles. You can see some of these early articles back here in 2018. The one thing that gave me pause was something he said in this article in particular. My first masternode setup experience. And so he went through this entire process, got some really good experience, firsthand experience setting up a masternode himself. But it was this line here that gave me pause. I never realized you need an advanced computer science degree to make this happen. Now, I don't have an advanced computer science degree, and I am very technically limited compared to people that know what the hell they're talking about. But whenever a founder of a very technical project says something that alludes to them not being that much of an expert, I get a little worried. Now, this was 3 years ago, so he could have learned a ton since then, and he probably has. But ideally, I want to know that the people leading this crypto project have some really, really deep domain and technological experience. Now, part of the reason we don't know a lot about their track record is because we don't know a lot about the people that are actually running this. But there's some good news about that. One is that their lead developer has gone through a KYC audit. Now, what this means is that a third party has given them a stamp of approval, said, hey, we've looked into this person, we've looked at his background, looked at his credentials, we know exactly who he is. So it's like semi-doxing. However, they also just announced that Loki, their lead community manager, is going to be fully doxed in short order. He actually mentioned his first name during an AMA the other day. I think it was Colin. But anyways, this is a good sign that they're starting to reveal at least one of the main members of their team. They're probably not going to announce everyone from their team, but it's a good sign that they're starting somewhere. And hopefully we'll learn a little bit more about him and the other people on the team's background so we can feel a bit more comfortable about giving our money to them. Besides just their experience, another really important piece in any kind of DeFi or crypto project is the communication and transparency that the team is providing. And while I gave them a C- on their track record, on the communication side, I give them an A+. So we mentioned the other day that they made this big announcement about reducing their reward amounts. Obviously, the community didn't love that, but you have to really appreciate that they were honest and open about it. And there's a couple things in particular I want to look at. One, you can see here in their Discord, they mention the announcement, they go through everything, and then they had an AMA right afterwards. And that AMA, they took questions from anyone that wanted to ask a question. They were there for 4 hours. Like, how many other founders do you know that are doing 4-hour AMAs, taking the time to answer every single question? Very few. These were the original reward structures that they were going to lay out in this new system. However, after a lot of feedback from the community, you can see here, we have heard you and taken all your feedback into account. They'll be announcing some changes to the announcement they made yesterday, and we've tweaked the parameters for all tiers, especially Heimdall Freya. So they took all this feedback, and in short order, they incorporated it into an updated reward structure. And they laid out a final and revised reward structure based on the feedback of the community. What more can you ask for when you're investing in someone? You want them to listen to you, and that's what they're doing. They're also doing a couple other things. They're getting opinions from the community on the investments that they make. You can see here, they were announcing that they're going to make their 9th treasury investment for $250,000, and they were looking at 4 different projects to invest in: DAG, Curve, Yearn, and 100. They put up a vote from the community to see what would make the most sense, and they got the community's input on the direction they wanted to invest. Again, that's just another green flag when we talk about the communication style and transparency from the founding team. One other thing they did is that in their original reward structure, there was actually a big tax if you were to cash out or claim your rewards before your payback period. They did that to incentivize people keeping their Thor in the protocol and to disincentivize people selling Thor on the open market, driving the value of Thor down. Now, they had some whales that owned a lot of these Odin nodes. They were worried that they were going to sell off their rewards from their Odin nodes. And you could see why that might be possible, because if they bought their Odin nodes back around Christmas time or after this spike here, like just after Christmas, then their rewards have been gaining steam over the past month. And when they hit their claim period around the 29th of January, they could be in a spot for a lot of profit. And if all of a sudden a bunch of whales started selling all their Thor into the open market, the price is going to go down even further. However, you can see that didn't happen in the last couple of days. And the reason is because the team was thinking very clearly about what they wanted to do to avoid that. These guys have a lot of foresight, and they're thinking about the long-term picture while not being too tied to it. So what they did in this case was they offered the Odin holders a chance to sell them back directly to the treasury in what's called an OTC transaction, over-the-counter transaction. And in this way, the treasury could buy the store back from these whales at a specified price without it hitting the open market. And so if the treasury is buying directly and it's not hitting the open market, that means that it's not going to have any real selling pressure driving the price of Thor down. Now, the treasury may be taking a bit of a loss because they could have bought this Thor from the open market at a cheaper price, but overall it was better for the entire price of Thor itself. They're also being really transparent about what's in the treasury. They plan to launch a treasury page where you can see all the investments in real time, but until then, they've just been listing things in the Discord, and you can see exactly what they've invested in. They invested 100K into Time, 150K into Strong, where they actually purchased 33 nodes, which this part's really fascinating. They're buying into one of their direct competitors, right? As an investor, I need to decide if I'm putting my money into Strong or Thor. In this case, putting my money into Thor gives me exposure to Strong. That's a pretty unique proposition that they have. And that's also a little different than Strong because Strong doesn't have a treasury like this where they're making other DeFi investments. And let's just talk about their future roadmap. So I was taking notes on this stuff earlier this week, and some of this stuff has already been announced. Right, we talked about the node fees that are coming out. Their claim tax is being reduced. It used to be much higher in the original version of the nodes. And like we listed out before, you can see this claim tax here from 1 to 10%. It used to be as high as like 25% if you were to try to claim your rewards early. They have a Thor lottery for NFTs that's coming out. So I'm really interested to dive into that some more. They also just rolled out Thor LP staking, where you can actually put a Thor AVAX pair into the liquidity pool and earn pretty good APY on it. I actually put $1,000 into it yesterday, and the APY was at like close to 4,000 or 5,000. Right now it's dropping because this total value locked is increasing, so they're less incentivized to give higher APYs. But I put in $1,000 yesterday. The value right now is about $906 because Thor has dropped a bit in price. But I made 0.39 Thor. So 0.39 Thor times, call it $160, about $62 against my $1,000, which is like 6.2% that I've made in the past 24 hours in staking. Pretty good deal to make 6% in one day, right? Obviously, they're very aware of Strong Block and what they're doing. They're competing in a lot of ways. And they're addressing that head on. They actually talk about this in their literature. They compare Thor versus Strong Block. So if you guys want, you can pause the video here and take a look at this. Again, I'll also have a link to this Notion page in the description so you can read this later on if you'd like. The main difference they talk about between them and Strong Block is that they have a treasury and they are using that treasury to invest in other things, something that Strong Block isn't doing right now. Now, Strong is trying to make their own blockchain. I'm not sure if that's really on Thor's roadmap, but again, that's where things start to diverge a bit more. That wraps up my thoughts on their team and some of their future roadmap stuff. Let's talk about whether or not you should invest in Thor Nodes. Well, I don't really know the answer to that because this is not financial advice and you should do your own research and your own due diligence. I just want to share what I'm doing. So what did I do? I bought myself a Thor node. It cost me 12.5 Thor, and I'm actually getting the higher reward rate for the next few days until the new rewards go into service. And I'm pretty excited about it. Again, when we're evaluating these projects, let's start with the team. Are they transparent? Yes. Do they have domain expertise? We think so, but we should learn more. And the fact that they're leaning towards transparency and based on how they answered some of the questions in the AMA the other day, I get a sense that they have pretty good technological expertise. And so I'm willing to bet that they're putting together a pretty good team. And they're thoughtful. They have foresight, something that we've seen, particularly in Time Wonderland, lacked a lot, and that was a big part of their downfall. And it's because of these features of the team, they're able to build a really strong community. Other projects could pop up that could offer the same or even better rewards, but it is the long-term sustainability of this community that I think will help set them apart. And when you look at the tokenomics, my payback period is around 90 days, and that's not too big of a time horizon to consider when thinking about all the other time horizons or investment horizons I have in my other investments, particularly in the equity market. If I really want to get out, I can. And they're building something that we think is very sustainable. They're not promising massive APYs. And even in their staking, when they released that the other day, they mentioned that we shouldn't expect that APY to stay high and that it should drop over time. Something that these other hype machine DAOs are not really doing. Honesty breeds trust and trust breeds community. I keep coming back to the community. The community matters in everything. I paid for my 12.5 Thor when it was about $200 per. So I'm in for about $2,500 in my investment. I also staked $1,000, so I'm in for about $3,500 in the project as a whole. Also, they have some really good tailwinds right now. Their growth has been really strong. Back on December 18th, they had 9,000 nodes. Today, they have over 82,000 nodes. They're seeing some pretty parabolic growth. And as long as that's not too whale heavy, that can be a really good thing. I definitely plan to check back with you all in about a month to see how this is going. Again, if you like this video or you got just like a little tiny bit of value from it, please hit that like button. It means a lot to me. It means a lot to everyone else that might need to see something like this because we want other people to get educated, and liking this video is a great way to get the word out. And if you want to follow my journey, hit that subscribe button. We just passed 1,000 subscribers. I was jacked up about that yesterday, and this is only the very beginning. We have some more videos coming up that I'm really excited about. The next one I think I'm going to do is just a quick explainer on impermanent loss. It's like this weird, difficult concept to understand, and I think I can do a pretty good job just breaking it down really simply for y'all in case anyone needs an explainer. I also need to do a recap of my first month of this passive income journey, so you can expect that one coming out soon as well. I got to tabulate all the numbers and see exactly where I am on this journey, because while I had some wins, I've certainly had some losses. If you're watching this, thanks again for making it this far. I really appreciate you, and thank you so much for being a part of this journey. I wish you health, wealth, and lots of learning. I'll see you soon.